Pranav Gundlapalle this morning, Senior Research Analyst at Bernstein. Pranav, as always a pleasure speaking with you. Just what stood out to you first? Because everyone's talking about ICICI Bank, but there's so much to talk about. Let's start with that, though. Is that the big winner from over the weekend?
I think they reported the best set of numbers over the weekend. The NIM dropping much lesser than expected was a standout positive. Overall, I think the biggest takeaway was there was no continuation of the scare we had from Axis Bank on asset quality. So that good asset quality trajectory continues for both ICICI and HDFC. So that was a big positive from the weekend. And between the two large banks, ICICI probably gave slightly higher than expected numbers, even more than what HDFC delivered.
Disappointed by HDFC Bank's slide in the net interest margin, 11 basis points. ICICI Bank managing to keep that to only about 7 basis points. And Axis, of course, had the worst slide. So how do you rank all of these in terms of operating metrics? And do you anticipate a further slide down the line? Because HDFC Bank already is pretty low compared with what it's used to posting.
Right. See, I think on an incremental basis, we do expect NIMs to contract for at least for another 1 quarter. So how that gets split between the first and second quarter, I think will vary by banks depending on what their speed of transmission has been. But by end of the year, we don't expect any material differences in terms of the NIM trajectory, at least for the large 2 or 3 banks. So over the next 2 to 3 quarters on a cumulative basis, we should not see too much of a difference in terms of the NIM movement. Should we worry too much about 7, 11, 12? I think not, because I think you'll probably see a catch up in the next quarter or 2. You will just see that the rank orders change. So no particular reason why one would have done dramatically better than the other. So most of these are related to rate cuts, and therefore should not be too much of a difference.
So if you had to sort of, let's do a private bank ranking first, Pranav, and a very good morning to you, Tamanna here.
Morning.
Axis, only because Axis is still, top of mind, and Axis, ICICI Bank and HDFC Bank. Now, how are you ranking them? And is ICICI Bank turning out to be the clear number 1 in that pecking order?
Yes, I think ICICI has the best numbers by a big margin. The only question is on the direction of travel, right? I think we've seen that the numbers have held up really well for almost about 5 to 6 quarters, almost holding on to their ROAs at 2.4, 2.5% level. So they've done a fantastic job on that, and therefore clearly standing out in terms of the best metrics. Axis and HDFC were stories where we expected improvement in metrics over the next few quarters. HDFC seems to be on that trajectory. Axis probably, at least this quarter, definitely was not on the trajectory. And that's probably reflected in the valuations as well, where ICICI trades today at a significant premium over Axis and also a slight premium over HDFC. So largely in order of their performances that we've seen so far.
Okay, what about the other results that came in, Pranav? And I think there's going to be a lot of attention on them. Yes, bank looking optically good, but maybe core performance a little shaky, you think? How did you look at RBL, Bandhan, and a clutch of the others?
I think this is a quarter where we did see a lot of noise in terms of the headline numbers being slightly different from the core metrics, because you had treasury gains come in for a lot of them. You also had some movements in credit costs along the way. So I think the biggest differentiator would be the simple loan growth numbers, where you see that ICICI again stood out with a 12%, and Kotak had earlier in a few weeks back reported a 14% growth. I think growth will be the big differentiator, whereas Yes Bank, for example, reported a pretty muted growth numbers. So I think the underlying loan growth will be the key to watch out for. The headline metrics in terms of EPS growth or PAT growth could be influenced by a variety of factors, which not all of which would be sustainable.
Pranav, if you put all of this together, there are a few pockets where some concerns might have arisen on asset quality in some pockets. And maybe some arguments have been made about seasonality, but then if you look at what Axis said, then really alarm bells start ringing. So therefore, is that something that you're watching very closely? And what pockets specifically are you paying attention to? Do you expect that pain to continue heading into the rest of the year?
I think it's an extension of what we saw last year, where, I mean, I think the consensus was we are done with asset quality pain in pockets of the consumer segment, the mass market segment, the smaller ticket consumer lending, and of course the MFI. But what we see in this quarter is that we're not fully done with it yet. So there is still some more pain probably to be seen for the next few quarters. Therefore, it means two things. One, we would still stick with the large two names, HDFC, ICICI. They're probably the clear, better quality banks and therefore will continue to outperform. That's number one. Number two, what this also means is that the growth in consumer credit will probably not come back in a hurry. And therefore, we are going to look at a slower growth environment for the overall sector for at least the next quarter or two. Towards the end of the year, of course, the base effect will start to help. But at least for the next couple of quarters, we think on a year-on-year basis, we will see muted growth across the board.
Got it, Pranav. So just reiterating, HDFC Bank and ICICI Bank top picks. Anything else?
We think in terms of operating metrics, those two would continue to deliver well. We also like some of within the smaller lending spaces, we do like the affordable housing lenders. So that's again a segment we like. Muthoot we continue to like as alternate forms of consumer credit remain weak. Gold becomes the last resort borrowing option, and therefore Muthoot should continue to do well as well. So we do like the smaller lenders selectively, but amongst the large universal banks, I think HDFC and ICICI will continue to deliver the best operating metrics.
Pranav, thanks so much for joining us this morning and look forward to talking to you after all the public sector banks post their numbers. Thanks so much,
Yeah,
as always.
Thank you.